Hey, everybody, welcome in. Sunday night version of the TDR Small Cap Sunday podcast. I am your host, Shaddales. Thanks for joining us. For those of you who have been watching this show for the past few months, this show is about revealing 5 small cap stocks that you may be unaware of and the reasons why we're interested in them. We've got some flashy ones here tonight. So with that, let's jump into tonight's show and welcome in TDR lead financial analyst, Bill McNarland. Good to see you. How are things?
Things are great. Had a good weekend. Bought the new Ninja ice cream maker. That was exciting.
What's this? This new Ninja ice cream maker?
I like all Ninja products. Anything they put out. They got a new 11-in-1 ice cream maker, and basically you make Dairy Queen at home.
That's what's the verdict? Like, it's that good?
Oh, it's unbelievable. Yeah. It's just I can't believe we lived without these things before.
All right, what's your top 3 flavors?
The kids all like the replicating the Score Blizzard.
Well, what kid doesn't like that? I think mine does as well. But I've got a father-in-law. He makes his homemade ice cream from scratch, and that's just the thing. They become ice cream snobs. They go to Dairy Queen, and they don't like it as much. But anything homemade, if you want to win the approval ratings of your grandchildren, if you're any grandfathers out there, make homemade ice cream because you got them wrapped around your finger. But I think we sound like a bunch of dads right now in our late 40s, but don't we?
Yeah, for sure.
Listen, we've got some interesting companies here tonight. Some flashy stocks, including 2 media companies and a horse racing and casino company. So lots to get into. This will be fun. So before we get into it, as usual, all views on the Small Cap Sunday podcast and the guests on this podcast are purely opinion. You should not treat any opinions expressed by us or guests as investment advice. The views on this podcast are solely intended to be informational and are not investment advice. Okay, we begin with our first company tonight. It's called Boat Rocker Media, which is an independent film studio located in Toronto, Canada. They trade on the TSX under the ticker symbol BRMI. Current share price 97 cents. Market cap is 55 million. Shares outstanding is 56 million, and daily trading volume is 77,000, so pretty low. The company is classified, as you said, as a mature company and features partners like Netflix, Disney, and Apple TVs. So, Bill, how exactly does this company create content and sell it to the partners that I just outlined?
Yeah. So this is interesting. They're a content producer. They make their own content. They come up with it for the purpose of selling it to groups. And we have a chart here. Actually, we'll bring up of who their clients are. They're selling to groups like Netflix and Apple TV and Prime and Roku, all over. And so this is a new business globally. And I see this in different places I travel to. I see this in Mexico where there will be these studios getting put up and people will be filming content and reselling it to these groups. And these groups, if you can produce interesting content, they want to buy it at a decent price.
So I'm curious to see, because I've seen this having worked in this industry now, but yeah, there are a lot of large media companies that do invest in these types of companies and eventually turn it in-house. So based on the overall revenue and it's a viable market, I would think this would be a good buyout target for a lot of these big major media companies, would it not?
I think there's a potential for that, and that could be an additional carrot. And this company too is into transactions. They had a business unit that they sold for $50 million cash earlier in this year that they carved off. So this is a potential either to sell a business unit or to sell a large piece of the business or the business in the future for sure.
You said if they sold the business to you, that was for 50.3 million, and the current market cap is 55 million. So what's missing here?
Yeah, and also they have some good production. I think some would be familiar with the show Palm Royale, Orphan Black.
Yeah.
They did some non-scripted TV too as well. Such things as Downey's Dream Cars with Robert Downey Jr. So this is interesting. And so yeah, so we'll go through the finances and take a look. But this is a viable business, making content, selling it.
Yeah.
So this is something is the future. So it's worth it for us to take a closer look.
Something we want to highlight each week moving forward is like the 52-week range and how the stock has performed. I'm seeing 69 cents to $2, and currently we're at 97 cents. So what's your views? What's your takeaway on whether or not, again, this is not investment advice, but what do you think of an entry point at 97 cents based on their
Uh,
52-week range?
it's middle of the range. For myself, you'd prefer to buy stuff a little cheaper than more expensive, closer to the 52-week low. But there's other investors that say, you want to buy it when it's already hit into its trend and it's proving itself and building up some steam. So I'm going to let the viewers decide on that. But myself, I just make my decision based on the financials of where they're at.
Okay. Well, let's go to the charts and their income statements. The revenue over the past year, along with growth percentage, what did it show?
So keep in mind, the company, as you mentioned, had a market cap of $55 million, yet they have revenue at $374 million. So this is
Impressive.
real. Their 3-year growth rate has been 28%. Last year it slowed down a bit. These companies, have some ebbs and flows. It was -2% of revenue growth, but 3 years they're coming along. But there was a couple things I noted that I liked. The gross margin was pretty good, almost 30% on making the content and selling it. So that's good.
That's in fat margins.
Yeah, but their SG&A is low because remember who their customers are. They don't have to go out and buy internet ads to go sell something or have a huge marketing department. They make something, they go to their buyers and say, "Are you interested in this? Let's negotiate a price." And so because of that, their SG&A is very reasonable at 23 cents on the dollar. And so no surprise, they have EBITDA of almost $19 million in the last 12 months.
These studios, are they often owned by the companies? Or are they leasing space? Do you know?
I don't know that. There's one very close to me in Mexico, in the beach area that we're at, and I did some research on it the last time I was down there. It was interesting. It had a huge transition of changes, and that's where Titanic originally was made and was built for.
Oh, yeah. I
But
heard it.
someone came in as an investors. They bought it in the last round, and now they're just making Netflix content in it.
It's impressive. Times have changed, haven't they?
Yeah, for sure.
Well, they have for quite a while. What's their current working capital and cash
Yeah,
position showing?
yeah. So I looked on the balance sheet. So they have a cash of 123 million with a
Okay.
market cap of 55 million. So it's
Wow.
a lot. But remember, they just picked up $51 million in the business they sold. But they have some current liabilities as well. So their working capital is only about 4 million, but their breakup value was 100 million. So the idea is that if they sold off everything they had, pay off their debts, it's worth twice of what the market cap of the company is.
That's a great find. Finally, their levered free cash flow. It showed what?
Yeah, this gets a little goofy. So they had leverage free cash flow of $110 million. That number is a little skewed because they sold the business and such. So it's not going to be replicated every year, but it
Yeah,
does demonstrate that they have no problem with cash flow. They have no problem with their balance sheet. They're doing really well. This is an interesting business. So I think, if you're interested in buying a business, even, that's in content, they have assets that are greater than a market cap. This is an interesting find, something I'd be interested in.
so moment of truth. I think we're going to get our green check marker. First one here tonight. Would you own this stock?
100%. I think you want to understand new media, you want to understand content. And so it's important for us to look at these types of companies.
All right. Bam, 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 bam. It's time for our second company. Place your bets as we head to Minneapolis, Minnesota. Company called Canterbury Park Holdings, a horse racing and casino company, trade on the NASDAQ under the ticker symbol CPHC. Current share price $20.13. Market cap 100 million. Shares outstanding is only 5 million, and daily trading volume is 82,000. Again, you've identified this as a mature company. So year to date. Again, we'll talk about this. How's the stock perform? What's the 52-week range?
Yeah, it's been trading around. It's $20 right now. It was down under $15 and was as high as 30. So there's definitely an opportunity here to do some trading. It pays a little bit of a dividend too, about 1.4%. But this is interesting. If you're into horse racing and you live in Minnesota, this is the only game in town.
Not a
And
lot to do in Minnesota, buddy.
there's
Not
very
a lot.
limited casinos, but so this was something of interest. One of these,
Well,
only game in town type stocks.
well, you found a few of these. There's a couple out in Alberta, Canada as
Mhm.
well. But I was going to ask what makes this company unique, but I think you pretty much answered my question. So that's pretty much, not a lot to do in Minnesota, as I said. But this is a company. Like, how long has it been around for?
It's I don't have that right on me, but it's decades old business
Okay, so
for
it's
sure.
established.
It's an established business. What was interesting about this is there's a couple plays here that people won't see right away. The first one, it's a real estate play. They have a huge amount of land that they're redeveloping and reinvesting into the business. So that's interesting. The
Okay.
second one that I thought was unique as well was this is a regulation play as well. So gambling regulations typically long term are loosening. Gambling in Minnesota is still fairly restrictive. As regulations change and become looser, they
Yep.
should get another bump up in revenue as well. So there was two additional plays there besides just their regular business.
So when you look at restrictive, like there's only certain things like outside of the horse racing when you're in the casinos can what? You can only play slots? Is that what
Yeah,
you're
there's certain. That's what I'm referring to in regulations in general in North America. So there's certain ones, for example, that you can't bet on certain car games, but they can only host a game and be able to get a rake off the game.
makes sense?
Certain amount of there's slots, not necessarily table games, and all these types of restrictions. How many? Because how much can you expand and stuff? Where can you be located? And when those things loosen for the established players, it gives them a lot of opportunity for future growth.
Okay, so if they've got a viable market, and like you said, quote unquote, the only show in town, let's go to the balance sheet. What was the revenue and growth percentage last year? What did they
Yeah,
show?
so in the income statement, put in perspective, the market cap's 100 million. They have 62 million dollars in revenue. On the 3-year basis, they've been growing at 22% a year. Last year was a bit of a dip; they were down 4%. But this is the number I love. Once again, their gross margins are good at 35%, but the SG&A is so low compared to big casinos. They're at 12.5%, and this is because when you're one of the only options around,
Yeah,
you don't have to spend a lot of money to convince
yeah.
people to come. And
What
that's
was
what I love about these businesses, these casinos in unusual or less popular areas.
yeah, well, great find. Maybe a trend that we need to focus on each week. EBITDA showed what?
Yeah, their EBITDA came in at 8.8 million. So they're
Okay.
making some money for sure.
Look at their current balance sheet, current cash situation is showing what about along with their working capital?
It's strong. They got about 23 million of both cash and working capital. The breakup value is about 83 million dollars on a market cap of 100 million. And so this was something of interest for sure.
Okay. Levered free cash flow. I know that's always the last thing we
So
ask.
we had to do a little investigation here. And there was a clue above about the real estate. So they had negative leverage free cash flow of about $1.5 million last year. But the reason for that is they spent $9.1 million on real estate development. So they are improving. They're putting back the money that they're making from the cash flow and they're investing it into expanding their real estate footprint and the development. This is smart. This is going to lead to unlock future value.
Well, if you're in the entertainment industry, you got to keep things up to speed. I know having worked in the entertainment industry, it's amazing how much change you have to make every 5 years to keep things relevant. But that's the nature of the industry. All right, final thing, moment of truth. Would you own this stock?
Absolutely. I like these out of town or out of the way. Well, Minneapolis is not a town. But these large city where there's not a lot of options for gambling. I like these businesses.
Well, big city, but at the same time, too, I don't think Minnesota or Minneapolis is known for its nightlife. But good find. All right, so two check marks, both Boat Rocker Media and Canterbury Park. Two companies. One's a media, one is a casino and horse racing, I should say, company, and both are green check marks. All right, moving on to our third company here this evening. It's a satellite systems company called CCOM Systems. Trades on the TSX Venture under the ticker symbol CMI. They're out of Canada's nation capital, which is Ottawa, Canada. Current share price $1.25. Market cap is 52 million. Shares outstanding is 42 million, and daily trading volume is pretty much non-existent at only 4,000. So, first up, again, I'll ask 52-week range for this stock. What is it showing? Has it really even moved that much, knowing the low daily volume that's taking place?
Yeah, it has moved. It's $1.25 now. It's at a range between 87 cents and $1.52. So it's been moving around. It has a dividend of 4%. If you bought it at the 52-week low, you would have been having a dividend yield of 6%, which would have been pretty attractive.
All right. So, what exactly, I guess, do they do?
Here's the thesis. No matter what you're doing these days, you need communication.
Yep.
And communication, a lot of times if people live in major centers, they forget about that there's not solid communication outside of major centers. I'll give you an
Mm-hmm.
example. In the Western United States, along the interstates, on Interstate I-15, which goes from San Diego to Alberta, probably 30% of the time you don't have reliable cell signal.
Is
And
it
this is
that
just,
high?
yes, this is Western North America. This is just the way it is. We don't have a lot of people out here. Now, imagine you want to take an oil rig and you want to go off the interstate, or you want to go, away from the center. There's nothing there. You need communication. Never mind if you want to go fight a war in another country in the
Point.
middle of nowhere. There's not going to be communication. And so this is a big growing area, and I kind of I wanted to look into how big is satellite communication growing. The data from satellites is growing at 31% a year.
Wow. 31%, which doesn't
Yes,
surprise me. So
because our
based on
data use is getting bigger, and we're not solving the problem of having data all around the world.
okay, so if you bring up highways and like there's drop-off spots basically for 30% of a highway from Southern California all the way up into Canada, and as mentioned, if you're going to war. So does this company work with different government agencies along with the military?
Yeah, that was really impressive to me. So I looked at they're looking at oil and gas. They're working in military, different groups that need communication, and we know that that's one of the number one things you need, and you need it quickly. And so this is something that they have been focusing on for decades.
So this industry is poised to grow in the coming years. Wow, that's huge. All right, let's look at their income statements. First up, what are we seeing as far as revenue last year and growth percentage?
Yeah, so this is a smaller business, $52 million market cap, 10 million of revenue, but their revenue is growing. Last year was 25%. Over 3 years, they've been growing at 8.7%. Established business, like we mentioned, they pay a dividend, but the gross margins are amazing, 67% margins. They spend a little bit of that on SG&A, so they had $2 million of EBITDA off the 10 million of revenue. So that's a business that's growing and that's viable.
That is healthy to say the least. All right, let's look at their balance sheet. First up, cash situation is what, along with current working capital?
Yeah, put its perspective again. Their market cap's 52 million, and their working capital is $25 million.
Okay, so
So
that's
half of it's
impressive
in the
too.
bank, half of the value of the company. So that there's no issues here.
Be curious to see how they land these contracts because once you get in, I think once you land one or two, it's rinse and repeat, or at least how much leverage you can actually pull with different government officials that you're working into government agencies, and then not to mention having a plethora of client lists that include the military as well has got to be something interesting. So, um, next thing I'll ask is levered free cash flow. What is it showing?
It's solid. It's almost $2 million on the last year, and so we know things are going in the right direction. And I agree with you about the military. It's tough to get in, and that also shows you that your business went through an extreme due diligence, and so did your products, and you made the cut.
Good point. It's actually a great point. All right, moment of
Right.
truth. We got our third green check mark here this evening.
This is a technology company that's established and growing. I believe in the overall thesis of satellite communication growth, but you're getting a dividend of 4%. If you would have bought this earlier in the year, you'd be getting 6% getting paid to wait.
All right, CCOM Systems, TSX Venture, under the ticker symbol CMI, that produces a dividend. Three green check marks. All right, time for our fourth company here this evening, yet another media company that I think many people will be familiar with. It's called BuzzFeed Media, based out of New York City. Trades on the NASDAQ, excuse me, under the ticker symbol BZFD. Current share price, $2.36. Market cap is 89 million. Shares outstanding are 37.7 million, and daily trading volume is around 2 million. First up, this is a familiar name, which is a digital company. Some of the assets that they own is BuzzFeed, which I think a lot of people are familiar with, which you see everywhere on social media, along with Tasty, which I've used many times, which are short cook videos, with the main demo of millennials and Gen Z audience. A lot of their content, as I said before, on social media with YouTube, TikTok, and more specifically, even Instagram. So from the outside looking in, looks like an attractive company, Bill, but under the hood, what did you find?
Interesting business. They would have qualified very well if we had a mid cap show a couple years ago. But
Yeah.
now they're
Yeah.
down to the micro cap size. So they had a blow off. Their stock's down 94% since the IPO.
Yikes.
Comcast was invested at the IPO and blew out at the bottom. They just gave up on the company. But there's the past Republican candidate. Uh,
Viv-
Go ahead.
Vivek Ramaswamy. We talked
Sorry.
about that off camera. So he's
Yeah, yeah.
involved, which obviously is a big name, but his background's biotech. So I'll be interested to see what he's able to do for this company.
Yeah, and he's put a 7.7% stake in as an activist. So that's there's different viewpoints here, but the stock's trading all over the map. If people are trading, it had a 52-week low of 64 cents. It ran up to $4.56
Wow.
after the news of him getting involved, but then dropped off when they found out Comcast was
So what's it at?
bailing.
Sorry, what was it at?
236. So it's in the
236.
middle of the range. So
Okay.
it's been 64 cents. It's been $4.50. It's in the middle now. And so whatever the news is, people either get excited or not. But I said, hey, this is interesting. The other thing that was interesting about the business is they're really adopting AI and they're proud about it. They're saying, hey, we're doing AI content. This is something we're really running with. So I wanted to see underneath how does this business look?
Well, they're going to need to invest in AI because right now, if their stock's down 95%, they need some margins in place. But how do you separate from the competition is the big question because everybody's getting involved in that landscape right now. But we shall see. But you know what? Not all things look to be great and nice and shiny. But I know in today's day and age with investors, they like these kinds of stories and how much they move. But first, like we do always, let's go to the income statement. And like I said, show the revenue from last year. It's impressive, but I think the most important thing is can they make money?
Yeah, here's the challenge. So the revenue was 227 million, but it's the competition that's getting them. It's dropping. So last 12 months was down 13%, but over the last 3 years, their revenue's been dropping almost 8% a year.
Wonder why? Just because of increased
It's
competition?
increased competition.
I
I
know.
don't have to go to Tasty for an ice cream recipe. I got a lot of options there. Same with media. So this is a very difficult. Now they have margins in the business, and they have a spend on SG&A, but they can't. When your revenue is dropping in the business,
Yes.
that makes it very, very, very difficult. And so, looking first of all, the income statement, we see some red flags there.
Yeah. Well, the media space is an interesting one because I remember when those tasty videos came out, they came out like a hurricane and were very, very interesting to say the least. But like anything, if you come up with a new idea, it's not like you do anything differently or your competition's doing everything differently. It's just consumers and viewers continue to gravitate towards something that's newer. And that's just the reality. You can't keep up with tech sometimes because things are ever changing and the media landscape is no different. So, okay, we just revealed obviously revenue and growth percentage, and we were in the hole. But what are they looking at right now? Current cash position and their current working capital. It revealed what?
So here we get into another red flag. So they had the market cap at $89 million. Their working capital is negative 66 million.
Oh,
So when your revenue is dropping and you got a lot of competition, that's one of the challenges. And so their breakup value is negative $38 million. And so this is definitely, it's going to have to be a turnaround story if it's going to turn into something. So we're seeing red flags again on their balance sheet.
Bill, when was the IPO? When was the date?
The IPO showing in the chart was about 2 years ago, and it
Oh,
came out
so
at $40. So this was a post-COVID exciting business at the time.
think about
Uh,
this and how much 2 years. And it's like the level of competition that has changed in a matter of 24 months in this space.
they were an early adopter to technology that didn't always work for them. One example is on they started to use automation early in the stage on Tasty Vegetarian, which was a subset of what they had. For about a 2 month period, they started showing meat recipes.
Ooh, how'd that
So,
go?
well, not well.
No kidding.
So that's an example of the early adoption of technology was pretty challenging. I think that's running smoother for them now, but we know that early adoption of technology has some hiccups as well.
No kidding. Okay, finally, levered free cash flow. It showed what?
Minus $24 million.
Yikes.
So this is a challenging situation. It's slowing business and the cash is bleeding out. So we got three red flags when we looked at three financial statements.
Yeah. BuzzFeed Media, you want to own the stock? Well, make sure you're fully educated because I think in this particular situation, we got our first red X like we always do every single week. We like to outline to people, is this something that's on sale or a trap? And we always want to walk you through step by step that, yes, companies and especially something like this people are familiar with on social media. Look at this, and yes, it moves. And yes, you want to basically buy a stock once it's on sale. but proceed with caution is what we're saying based on some of the stuff that we've just outlined once we look under the hood. So we got our first red X, correct, Bill?
Correct. Yeah.
All right. 3 down, 1 to go. Leave some comments below. Let us know. What do you think of the stocks that we've had here so far this evening? Any other further questions you'd like to know? Let us know what they are. We'll make sure that we reach out to you from both myself and Bill and give you some more information. We'd love to get your feedback. All right, final stock here this evening. It's an environmental company, again, based out. Oh, you're going back to the Ottawa, Canada. Well, it's called BluMetric Environmental. It trades on the TSX Venture under the ticker symbol BLM. Current share price 58 cents, market cap 17 million, shares outstanding is 29 million, and daily trading volume, again, minimal at only 23,000. First up, let's again look at that 52-week range of the stock over the past year. What's been the range and how it's been performed, Bill?
The stock's doubled. It's close to its 52-week high of 61 cents. It's really, in the last 2 months, it's been taking off. So there's some investor interest here. They're paying attention.
What's the low been in the last 52 weeks?
The low is down to 25 cents. So it's almost up to its high. It's had 250% increase.
Any reason why the stocks move recently?
I think investors are getting interested in the story, and they've had some good financial results and such. And so I think investors are starting to understand.
Okay, let's find out more specifically about this company. How does it work, and who are they working with?
Well, if you got some similar to the satellite company, if you're going into a tough situation, you need satellite communication and you need water. And so I don't know which people would say is more of a priority. Depends how old you are, I guess. But
no kidding.
But you need both of them, right? And so again, they have the same story. They have military contracts, commercial and industry like mining and oil and gas. You go to an unusual place. First of all, you need water. But secondly, there's environmental concerns when you're doing things like mining and you're doing things like oil and gas. But they have something called mission ready water, which is they can get you set up quickly if you're military and you're going into an area of conflict or you have to go somewhere. That is one of their key focuses for revenue growth for the business.
You had to contemplate there for a second as to what's more important, technology or water.
Yeah.
Is that a reality of what we live in right now?
I think most people ask stuff, they say, well, I need my phone first, right? Water we can get around to.
Yeah, no kidding, right? Nothing better than having a cell phone in the middle of a desert for 30 days and no water. But that's just the reality we live in right now. But all right, let's go to the balance sheet. And what do we see as far as revenue and growth percentage again from last year?
So we're looking at the income statement here. Market cap 17 million. They got revenue of 34 million. This is a slower growth business. They had 7% average growth over the last 3 years, but they had good margins, 27%, and SG&A was lower as well, which is nice to see because I think they have bigger contracts. They're not putting ads on Facebook to get customers. So they had an EBITDA of $1.7 million, which is 10% of their market cap. So that was quite impressive last year.
And the stock has doubled. I think that's what a lot of retail investors like to see if there's some sort of movement. All right, let's move to the balance sheet. Current cash position is showing what, along with their current working capital?
This is where it gets goofy. Their working capital is 11.3 million with a market cap of 17. So when they were trading closer to their low, they were trading for less than their working capital. That's always a sign. When we see stuff like that, eventually these pops happen. So this is an example where this was completely mispriced at one point there, and we can see why.
Okay. All right. Levered free cash flow. Final thing I'll ask.
Yeah, it was down a bit last year, about down 1.4 million. But that's just because their account receivables increased, which is naturally when they were growing into new contracts. When you're going out with groups like military, sometimes they don't pay you. Your terms can be 120 days or longer or whatever. And so they established new business, which made that a little bit challenging. But they have the working capital to cover waiting for an increase of accounts receivable from good clients.
Okay. Moment of truth. Would you own the stock?
Absolutely. I think this is a very interesting business. It's growing. Again, I love the consistency or the proof of a product when you have a government contract that has decided that you have an excellent offering.
All right. So 4 green check marks, 1 red X. Boat Rocker Media producing some pretty strong revenues right now. Trades of the TSX under the ticker symbol BRMI. And they have worked and are working with some pretty notable companies, including Netflix and Apple. So that's a green check mark. Canterbury Park, which is a horse track racing and casino company in Minneapolis, Minnesota, kind of giving you that sort of angle of the only show in town. Healthy margins. So that's another green check mark. CCOM Systems, TSX Ventures, CMI have contracts with companies like different government officials and military along with the military, I should say, and very strong company. BuzzFeed Media, even though Vivek Ramaswamy has a little over a 7% stake, proceed with caution. It trades on the NASDAQ under the ticker symbol BZFD. And then finally, BluMetric, TSX Venture, BLM. Again, that's out of Ottawa, Canada, and working with some pretty impressive companies, to say the least, producing real strong revenue. But as you said, the stock has doubled recently. So it's something that has caught our attention. So all in all, looks like we got some good, healthy 5 companies, or should say 4 good companies, but one that you should be aware of here this evening. Job well done, sir.
Thank you, sir. Yeah, it was fun.
Was it good to get into the media and casino space this week? Did you?
Yeah, it's interesting too. Anything media I want to look at, learning about what's working and what's not, and it's interesting to see how fast the trends are changing.
Yeah, as usual, leave some comments below for Mr. Bill McNarland. Big thank you for him doing this research again and highlighting 5 companies that you may not be aware of, and some of the stories behind the scenes, good or bad. So if you don't know, now you know. So long story short, smash that like button and make sure to leave some comments below. Bill, have a great week, and we'll see you later on next week, okay?
Yeah, take care.
All right, thanks. Hey everyone, thanks again for watching. Hey, we're humming along, and it's all because of you and the audience and community that we're building. So again, make sure to smash on that like button and leave lots of comments. Who do we have up next? You let us know. Who should we interview? What companies? Is there anything you like? Is there anything we're missing? We're all here for you. Let's get on with each other and build this community for all of us to benefit. As usual, don't forget to subscribe to our channel, because in the end, we wouldn't be here without you. Thanks again, everyone.